Okay. Okay, so today I'm back testing my new swing strategy on TradingView, and I thought of backtesting GBP AUD today. So let's just go swiftly through this plan, and I'm going to show you a trade that I'm looking to get into on GA. So you can clearly see that this is more like a structure following plan, and this is like very easy to trade. And sorry, this is like stupid easy. Obviously you have to understand structure to trade this, and it's not necessarily easy, but when you can understand what you're looking for, when you start to become like confident with your trading, these kind of things, these feel like easy money, you know what I'm saying? So let's just look at the structure here. Let's start from monthly, because that is a good time frame to start to look for the dealing ranges. In monthly, first dealing range is this one. We are in the premium of that one. Looking also at this from weekly perspective, this is your latest weekly dealing range. We are in the premium. Question now is, would you expect us to fall back to the discounts? Considering we have had many strong bullish candles here, we haven't really rebalanced any discounted zones. Plus, obviously, we just identified the monthly that we were in the premium. So we are in premium on monthly, on weekly. We've got a lot of range to go down in these areas, and we've got some inducement liquidity here. We are right now respecting heavily this fair value gap. A few weeks ago, you can see what happened in here. That's a liquidity sweep. Then we have had few dojis, and now we have pushed lower with this previous week candle. Created order block here, reacted off of that. Looking at the daily, and this is the time frame where I start to look at the structure. If you understand how the structure works, also you've got this balanced price range. Look how the bodies are respected to that midline. Okay, we sweep that liquidity. This is the first break of structure to the downside. Then we start to chop back up. We start to chop back up. Have another strong push to the downside. Now we are retracing once more back up, but would you want it to have like would you want it to take sell from here? That would have been like a somewhat valid trade to take immediately sell from the daily. Now I tend to scale down to 4-hour time frame, but that could have been valid even in 4-hour. Looking in that is a little bit cleaner, but in 4-hour, looking at this, we break structure multiple times with these lows. Now the question is this just sweeping liquidity to go to the upside? I don't think so, because looking at the higher time frame, weekly and monthly, we have these relative equal lows here. Also, the price wants to balance to the equilibrium of this weekly dealing range, and so looking at this price like now, I'm thinking that price wants to chop a bit to the upside into this 0.618 level, or these deeper retracement levels for us to then smash to the downside. So I'm thinking of sells in here, and this is the basic um, pattern that I'm using to enter into these swing trades. Usually they last around 1, 2, 3, 4, 5 days, maybe a little bit over than that, but somewhere in between that range. And yeah, I'm obviously monitoring multiple pairs, and that's the best thing about swing trading. You can kind of like set and forget these trades, and they kind of like play out on their own time. And if you are comfortable with your swing trading, obviously I'm not that comfortable as well now. I haven't used these kind of things that often or that much, so I'm kind of like learning, if you will. But yeah, let's go back in time to, like, I don't know, let's go March 21 and start kind of going from here. So what do we have here? Um, Starting from your monthly time frame, and I'm now very happy that I looked into that monthly time frame, because we have swept a few times liquidity to the downside with these wicks. And looking at this monthly huge bearish range, I love to look at these dealing ranges. Now, are we able to rebalance all towards the equilibrium? Maybe there is no like fair value gaps up here in the premium, but regardless, I'm thinking that we are seeing a retracement back to this. So I would mark that out as your buy side. So buy side liquidity. So do you want to run there? Let's see. So we've got this huge push up here, and this order block caused that move, so we can mark that out as your monthly order block level. Order block in monthly. Let's look at weekly. So yeah, we fall into that. Monthly respects this, but we are, especially this latest weeks, few of these red candles are much bigger than these up candles. These up candles are more like chop 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 chop. But we created some fair value gaps, and we respect. I mean, there's only really one, but we respect that, and we flip this gap, inverse that one. So let's keep that in mind and understand that. And we've swept some sell side now in weekly, so we need to understand that and go to the daily chart now. Now I ask myself a question: how would I want to be involved in this market if I wanted to go and take buys into this buy side liquidity pool? Um, Honestly, that's a little bit hard question, because the structure and the conditions that we are in right now are like quite consolidative, and this is why you want to trade multiple pairs with this swing trading strategy, because sometimes you might enter in a long periods of time when you kind of like just consolidate here. So basically you want to be able to trade multiple pairs, so that you don't get stuck into these consolidations. So the first range that I notice is this. But even like this, we break structure to the upside, but this is like a wiki break structure, and I don't really like this, and nor do we even retrace that down enough. So even though I can identify the drawn liquidity, I have to understand also, and you also have to understand that not every time are you able to get in to something that you are able to identify. So I would want to see some type of sell side being swept and then sharp move up, because if we now start to get sharp move up, then I'm like a little bit confused and I probably will hesitate of entering. Okay, we are starting to build a little bit sharper structure in here, as you can see. Now, I would ideally want to see price like wicking or some not too much of a like clean break structure to the downside, because then I want to see the break structure to the upside in daily. Okay, now we're starting to see some clean candles. Now the problem is obviously that we didn't really, yeah, we swept like these lows, equal lows, whatever. But is this like good enough? Because after that we didn't have the sharp move immediately. We kind of chop, chop, chop. But then we swept all of this, and then have the sharp move to the upside. So what I would say is this is okay break structure now. If this gives you now nice price range, I'm going to look for the entries and entries with that Fibonacci, you know what I'm saying? So let's see what we create here. Okay, we don't retrace here. We kind of just leave. So this is good break structure now. We leave like this week with fair value gap and stuff like that, and now we're printing bearish weekly candle. Also, your problem in this would be that looking at this risk to reward right now, 1.4 not good enough. That's why I use my Fib tool, and this would be low, and I would only enter from the 0.61A and a little bit lower than that to get the 2R, which I kind of deem as an important for me. I want to get minimum fixed risk to roll out of 2 to 1. So now we're starting to break to the upside. Let's see what we can get. If we sweep this area before we enter, get the entry, this is obviously invalid. But we are kind of chopping and having low momentum to the downside. And I'm thinking that we're quite close to the liquidity pool. So we are liquidity pool, so we're probably going to step that out before my entry, as you can see now. Okay. Now the question is, what I do in this kind of situation where my entry is kind of left. My drawn liquidity is done. Well, sorry, let's just remove those. I want to now identify the new range that we're trading in. Oh fuck. Accidentally changed the pair. Where were we? Was it? Yeah, it was here, man. Sick. So we wanted to see that being stepped out. That was like monthly fair value gap, and like not always in monthly do you see like these nice fair value gaps and targets like that. So you need to kind of understand the understand trading quite deeply, because that was very clean drawn liquidity. Not always everything is clean, and then you need to identify, like, are you able to identify in this condition what the drawn liquidity will be. But yeah, this is where we left. So we left this price range behind us. There's like a weekly fair value gap that we can mark out as possible draw sell side. Now, obviously the monthly range is from here to here, and we are still far off from the equilibrium price point. So the real question in here is that would you want to go for shorts to that sell side liquidity before we enter into the equilibrium? I would say it's fairly viable option because you've swept the buy side, and even if market wanted to do that, it probably wants to rebalance this price leg before moving there, for the fact that it just swept buy side. It wants to take some of the sell side, and there is a lot here, plus this fair value gap in daily and weekly time frames. So identifying that, in this kind of situation, I would scale down to 4-hour time frame and look for break of structures to the downside. Obviously, in 4-hour, I'm not going to be able to get the 4-hour time frame in this bar replay mode because I don't have the TradingView premium subscription, so I only can backtest this daily time frame, but it's okay. Even if we don't take any trades, we can still like identify our drawn liquidity and move accordingly. Let's just mark this equilibrium price point with this line so that this price is clearly giving you upside momentum. We are probably going to run towards that area in daily. Now, I like these kind of signs where you break structure like here, and you could take trade looking something like this and be happy with your profits, but I don't tend to take trades like this in far premium. So I would, in this kind of market condition, I would be looking at this daily, maybe scaling down to the 4-hour, maybe even 1 hour, and maybe having like shorter term swing trades. Obviously, if I can't identify anything, I'm going to the other person. Okay, look, like a magic, we rebalance that equilibrium level and we reject immediately. That candle that rebalances the equilibrium is a wick, it's a doji, and then we have strong bearish candles. So in this kind of condition now, this is the time to eat, in my opinion, if you are able to. Well, yeah, if you are able to make. So looking at this weekly, daily, we've got everything. There is not too much fair value gaps in this over here. We are now breaking to the downside. Now the question is, are we able to get into anything, or is price basically just moving too fast for our liking? Well, we draw the breaker structure. Oops. Just, yeah, there's your break of structure. Now the fib levels 0.618 level lines up nicely with these equal highs and fair value gap, whatever. So just having your entry there. Now, as price has moved previously, it hasn't really have not really retraced too much. So there's a likelihood that this kind of trade will miss you as well, which is kind of annoying. But it is what it is. You draw, but at the same time, GBP AUD prints this kind of um, chance you can get this similar kind of trades in other pairs, and maybe some other AUD pair maybe could retrace a little bit deeper if you don't get into this. So you have to understand the swing trading. Okay, that would have gotten us in. Now then you start to react to the downside. This is a good reaction, maybe a little bit too choppy. We want to see a little bit more downside momentum. And with my risk management protocol, I would, after you hit the 2R, I start to secure my profits from there. Maybe partials out, maybe let price run a little bit further and roll my stop there. A very good reaction here. This is why I use also the 0.6618 level, because you can see that we don't quite trade up here. So this would be very annoying to miss that. Literally for like a fucking few pips. So yeah, look at that. That's like, okay, this is in daily chart. There's like 10 pips, but anyways, that's 10 pips when your stop is 233 pips. It's quite small amounts, but yeah, this analysis with this trade was absolutely spot on from the monthly. We waited for that to rebalance, and if you kind of think like the trade idea from here was long, we didn't get that. That was in May 21. The next trade that we get is September 21. So that's like effectively like 4 months. 4 months, you know what I'm saying? So that's why you want like to have like multiple pairs, like maybe like 30 different pairs that you trade. And that's what I do at least, because if you get two trade chances, possibilities per like month per pair or some shit, it's like quite a little. But yeah, so the ending, like the end target is down here. At this point, I would have moved like break even, maybe taking partials, maybe, I don't know. I'm not fully sure on that. But had I let this run like this would be run to the break even point as of now. And I would just let it do its thing. And yeah, we would be basically 2% on profit with this and taken out there. Obviously, it's super annoying that it kind of doesn't really take that out, that sell side, because the sell side that I had identified here is like fucking, again, some like 10 pips away. We can like do it accurately here. So yeah, it's kind of annoying, but looking at the weekly, I think this is probably just retracing, giving you maybe another chance to go. So at this point, I've secured 2% with this trade. Now I ask myself a question. We don't take that liquidity. We do not. So oh fuck. Come on, man. Let's just, I don't want to be spoiled what's happening, you know. So let's just cut that from there. So obviously this is now the, yeah, bullish reaction from this level. What are you thinking at this point? Well, I'm thinking this is a bearish price. Like now we are rebalancing maybe that one to go lower, because it would be quite sensible for market to do that, because why would it leave this, like this fair value gap open, this sell side liquidity open, because we were so close? Why would it leave that open? Well, the answer is that the algorithms, the market makers, they want to engineer liquidity in this area, and this is now relatively good lows. They have also, like, even like this downside price action, yeah, we are moving down steadily, but we are not really that like energetic. So we've built liquidity above these highs, and now we want to probably step that out before smashing back to the downside. Hence the bullish candles here. So the trade would look something like this. If I wanted to enter, I would probably be willing, but because I would be a little bit hesitant, could like be, I could be like having a little bit smaller risk with here, just because of the strong bullishness here. But I like the reaction, and you could even take scale in with like 4-hour time frame from this. Obviously, if your conviction was very strong with the sells, I would be very content with this, and just like stay sharp with this, because I don't like how, like this comes with experience. When you get in, you get the reaction, but I don't like what this does. Like this consolidation, just at your entry level, like too many times have I seen this in when I've been day trading in shorter time frames, where it kind of leaves, it comes back, leaves, but doesn't really leave that far. Then it kind of consolidates, and then it absolutely shoots. So I don't know. Maybe do your research, but we've kind of created equal highs in here. This is still probably valid up here, this top, but I don't know, man. I would probably be break even. I'm not gonna lie with this. So let that run. And this is what I mean. Like with the experience, you start to understand that I don't know what is the exact reason why. It just comes with the intuition. Like I don't want to be part of this anymore. So the break-even point is good at there, and it saved us basically. But yeah, market left that low open. It kind of left took now this. Now we have to evaluate this whole price action again in monthly. Yeah, looking decent. I don't know, man. Weekly, like yeah, these are things that you can't really marry yourself into, guys. Cause like yeah, you could sweep this stuff, but this is super small fair value gap, and it's not that important. Though at the end of the day, like looking at the weekly price action, we are building many order blocks and a lot of resistance like over that level. So it shouldn't be expected that market just smashes like downside from here. But yeah, basically that's it. We got nice trade. Another one where we kind of would have taken it, realized what market started to do here, and this is what like why professional traders are called professional risk managers because you have to like adapt into the circumstances. Maybe you think that this is good, so but then you realize it's actually not when you start to see this, and then you just get out with the break even, maybe a small win here. So so yeah, I'm basically happy with what we did here.